Samantha, I'll start with you. The point that Bob just made there, the comments from Fed Chairman Powell yesterday, is trade really the biggest thing in focus right now for the markets?
I think it is. I think that the market can actually rest easy that the Fed is not going to do anything to surprise them. I've always said that the Fed has actually been a beacon of certainty, whereas politics and trade are uncertainty that the market has to deal with going into 2019.
Yana, your thoughts on this?
I think investors are looking for leadership, and if you look at the leaderboard to date, it continues to be the same, which is growth continues to lead the market. Interestingly enough, while we're focused on sort of the market overall, there's a lot of value to be had. If you look at the spread between sectors best and worst, it's about 25%. On an industry basis, it's over 30%. And on individual stocks, it's over 100%. That means that fundamentals and stocks move on those fundamentals. And that's what we're looking for in this market, irrespective of what the headline risk is.
But we haven't really gotten that very often in the past, have we? I mean, those stocks that have been cheap have remained cheap, haven't they, Yana?
Absolutely. And I think the point that was made earlier, obviously, trade policy and monetary policy are the biggest sort of anchors to the market right now, which is why you had the most economically sensitive areas of the market hit the hardest. If you look at the multiple sort of compression, depression, whatever you want to call it, it's been the hardest there. But overall, the market is also selling at a discount to its long-term average. If you look at forward multiple, if you look at 2019 earnings, and the value that I spoke of actually resides in big areas of the market. Look at healthcare versus staples. Look at utilities that is leading today and leading year to date relative to technology. Technology is selling at a discount to utilities while having top line and earnings growth in excess of that sector and the market. So again, going back to trying to sift through the rubble and identify value opportunities that we think are going to stay not just for the end of the year, but as we enter 2019.
Samantha, we got 10-year Treasury yields moving lower again today. Have we, at least for the near term, peaked in terms of rates?
Not necessarily. I mean, it's in the realm of possibility that rates go lower. And I just think it speaks to the fact that the Fed controls the short end of the yield curve, and they have a little bit of say and sway on the long end, but the long end seems to be doing its own thing. So the 10-year yield is still a moving target.
So
Yana, I wonder how you think we should read, for example, a couple of pretty high growth tech stocks and their movement over the past several days. Look at Salesforce. They had some pretty strong earnings. They're up 13%, let's see, for the week. And then look at AMD, which was having a rough time. It's up about 12% for the week, 25% for the month after having a rough time. Are some of these tech growth stocks coming back into vogue, or is this just kind of a bounce off of where they had been before?
I think they've always been in vogue. I think, listen, I think we as investors perhaps gotten a little lazy. And what I mean by that is we've tried to mimic exposure to a lot of different areas of the market by just investing in 4 stocks or investing in an ETF. And you got to do your homework. The names that you spoke of in very distinct businesses, and what you saw as it relates to Salesforce, which happens to be one of our holdings in the focused growth strategy, is it moved on very good earnings results, and not only earnings results, but also projections and guidance and the opportunity going forward. So again, it's going back to basics, it's going back to fundamentals, and it's trying to figure out where the dislocation as it relates to the sentiment and the fears that we all are trying to get through with fundamentals and underlying top line and earnings growth opportunity. And that's what we're trying to balance. And long term, that's what we've always had to do, which is face short-term uncertainty and try to position for the long term and try to identify opportunities that are going to be here for the long term.
Samantha, I'll put the same question to you. I mean, where should investors be putting their money and positioning themselves right now?
I just don't think it's a given that value starts to outperform. There's nothing to suggest that the momentum behind growth stocks is going to stop now. In fact, the macro environment suggests that value should be doing better, but we know it's not. So we are saying trim a little bit of profits off of growth and reallocate to value. However, we still like that growth overweight.